All right. For the sake of time, we'll go ahead and get started here. Thank you to everyone who participated in the poll. And Steve, it looks like we've got a good mixture. So we've got a handful of folks who are already franchising, some who are hoping to franchise, and then about half who are just curious to learn more. So a good group here today. All righty. So thank you all. Welcome to our first webinar with a member of Revel's advisory board. For those who are not familiar with the Revel advisory board, this is a newer addition to Revel's offerings, and it's essentially exactly how it sounds, where we've got a group of advisors for Revel and Revel clients, and each of these members brings many years of valuable experience, just leading in the restaurant and retail industries. And so we're really excited to have Steve on the call today with us as one of those very experienced experts. And so if you're just joining, we are going to be focusing on franchising today. And it is my pleasure to introduce Steve DeSutter, and he is today's featured speaker. So let's do the next slide. Just a little bit more about Steve before we jump in. So most recently, Steve was CEO of Focus Brands. For those who are not as familiar with Focus, although it's a pretty major group of brands, they have Auntie Anne's, Cinnabons, Carvel, Moe's, and a handful of other brands within their portfolio. And not only has Steve done that, but he's had more than 45 years of transformational engagement experience in several industries. We've actually spanned from quick service restaurants to convenience retail, and he's got some experience with biotech startups. So a little bit of everything there. He's led large domestic and international franchise organizations and has experience with franchising and corporate operated enterprises. So we've really got some very nice and broad reaching experience here with us on the line. And of course, some of his notable expertise includes turnarounds, scaled successes, and the relationships that are so valuable to success for an enterprise of any kind. So thank you so much, Steve, for joining us today. Let's go ahead and move on to the next slide. And we'll jump right into it. So I'll start with the first question for you, which is just what are some of the essential factors to consider when you're exploring the right franchising strategy for your business?
Sydney, thank you. And thanks to Revel Systems. I'm loving this partnership that I've been able to forge with them. Just a little bit of background for all of you. And by the way, I must say, for all of you who have logged on, who are going to invest the next 45 minutes with us, thank you as well. I've always said to my teams over the years that the greatest honor we can ever have as an executive is that anybody actually cares to listen to us. So we'll be keeping track to see if you actually last for the whole seminar or not. Before I answer that first question, Sydney, I do want to say that a little more depth for each of you. As I see the mix of those who have joined this webinar today, about 3/4 of you are either in the really seriously thinking about it or in the bucket of I'd like to know more. That's a lot. There's also about 1/4 of you who've already been there, done that, and some of you probably have enough experience that you could do part of this webinar. So I'm going to try and balance my comments so that I touch on all of your interests. There will be a Q&A at the end, and love to hear about them. As Sydney pointed out, I have some experience across a variety of industries, both owned. My very first management job in my early 20s was in a multi-unit business that I was fortunate enough to double over 2 or 3 years, and it was a pure commodity business. And so I learned how important trust and reliability were, because that was the only thing that differentiated me from the guy down the road. That will not be an unimportant comment when it comes to your consideration for franchising, because your ability to build trust and maintain trust with independent operators will be a really important component. You'll see me touch on that over and over again. The other thing you ought to know is that, and it's fair to say that I've been responsible for, in very senior roles, including the CEO of Focus Brands, of very large franchising organizations. Burger King's international business was in 35 countries. Focus Brands had 2,000 independent owner-operators, franchisees, across 7 brands. But each of those 7 brands had very different characters. So a few of the examples I will pull for you today will be across smaller brands and larger brands, more mature. And if you don't take away anything, especially if you're really thinking about franchising seriously, or if you're already into franchising, a lot of my comments are going to reflect on what it might look like in 10 or 15 years from today. Because how it looks in the early days and how franchising models look for your business as they mature change over time. And that's something that's hard to see if you're in the middle of franchising yourself today. Unless you've been in this industry, you don't get a chance to see what they look like when they've matured. For instance, the Burger King business, when I joined it, had been mature. It had been around since the 1950s. It at one time was actually larger than McDonald's. Most people don't know that. It was global. It was incredibly matured. And it was owned by a big conglomerate, corporate structures that kept handing it off to the next person. And they couldn't keep a senior executive in the seat more than 2 years back in those days. And so it was full of a lot of turmoil. And that turmoil allowed me to understand a lot about what happens with franchises in transition. Now, that won't happen to you today if you're young and new in this business, but it is something to think about because it has a lot to do with your strategy. Now, Sydney, finally to your question. Some of the essential things to figure out. So first of all, the big question for 75% of you today is, should I? Is franchising for me? And it's not for everyone. And more importantly, it's not for every business model. So I've been successful. My teams have been successful. Let me be clear. I've been lucky to have been able to have people around me who were really talented. And so my teams were incredibly successful in company-owned operations where we took a business over 6 years, we quadrupled the earnings, and we took the stock from $10 to $80. That was wonderfully successful financially. If you're an owner, that sounds exciting. And that was a company-owned operation with thin margins, but we did the right things to win. And I've also taken franchise brands like Focus Brands who grew dramatically over the 6 years we were there. And it was a growing business when I got there. A lot of the team that had done that was still there. I was just lucky to be with them. We continued to grow that business. And so both models can work, but your particular business model, the business model of your concept, can affect the success of franchising, whether you should be company ops or owned ops. So for most of you, I don't think exclusively all of you, there may be some retail here as well, but for those of you who are in the consumer side of restaurant businesses, quick service versus fast casual versus full service, each have different levels of difficulty in executing to a written standard. And I'm going to highlight to a written standard because if you're considering franchising for the 75% of you on this call, and you can't fathom the idea of being able to write down most of which is really required to be successful at delivering your brand to guests, then you want to think about whether you can support that kind of concept, because some concepts are just more difficult. That's why we see fewer full service restaurant concepts as franchises than we see as quick service. Think about the platform in the back of the house. If it can be fixed in like almost anybody with like 2 weeks of training and a document in front of them can run it fairly flawlessly, that's a good model. Second point of consideration, if you're a founder, and my guess is that you either are on this call because you work for someone who's in a founder organization or you are a founder, about 75% of you, maybe more, even those who are already franchising. There are certain things that are really important to you. And by the way, things that I deeply, deeply appreciate as an executive, because I was never a founder. I was very fortunate to have worked with founders. I worked in convenience retail business with the founding family. And although we were publicly traded, we had the culture and the values and what I call the noble mission that founder was on. And I understood how important that culture permeated the delivery of how we serviced our guests. And so preserving that to founders is very important. In fact, I find founders to have really two things about them that are fairly religious. And one is, does the changes we make our brand better? And in other words, they make it better for the guests, because there's a reason why you believe in your brand and you believe it's the best it can be for your guests. And two, can it be executed by operators? And those are things that you're paying really close attention to. And not only did I see that in the convenience store business, I saw it at places like Auntie Anne's, one of our focus brands that was just one generation being removed from the founder, Anne, or the Cinnabon business that still had the original founding family member, one of the son and the father who started that business in franchise, was still involved in the business and still on an advisory board. And so having those relationships and those brands reminded me of the essential views of how founders work hard to preserve their noble mission in their brand. That's easier to do, candidly, in an owned operation than it is in a franchised operation. Not impossible, it can be done, but it does add a level of complexity, and so it's a consideration. How important is that to you, and can you execute it? Third thing that I would point out as a consideration, this is also very important. Do you know exactly, this is a tough question, so I don't know who each of you represent that have logged on today. Some of you may actually be the owner. Some of you may be the marketer. Some of you may be the operator. But does your brand know the answer to these questions? Exactly why, where, and how you win in a competitive marketplace. You really need to have that nailed if you're thinking about developing your franchise. Those of you on this call that are already in the franchising, have already run into that, and you know that to be true, because immediately your franchisees look to you as the expert. And as an expert, you need to know more than we were successful probably in one concept. You probably needed your concept out there in multiple locations and probably in at least multiple different kind of markets or environments to really be able to answer these questions before you're ready for prime time and rapid expansion in franchising. Next point I'd like to make under considerations, and I'm going to go a little long-winded, but I think these are important to you strategically. Look, the desire to franchise is usually driven by the desire to expand rapidly, reduce your risk as a capital investor, as an owner, your firm's risk, enjoy higher cash flow margins. And I know that because I saw the kind of cash flow margins that we enjoyed at Focus Brands and at Burger King versus the owned operations of the convenience store business. They're very different. And those are very attractive and certainly important to you. You want to reduce the amount of investment on your part, and that's really important too. But here's the caution, and this is a kind of a caution as you move down the road. We won't necessarily feel it at the beginning of franchising, but you're going to eventually feel it. And that is that it might mean limited capital on your part, but it does not mean limited capital. The same amount of capital to run to establish and grow company operations or owned operations and franchise operations is pretty much identical. It's just that who has the loan, who goes to the bank. You need to be just as concerned about their return on capital as you would as if it were your own. So you don't get to divest yourself from that return on capital at all, because the return on capital that your owner operator as a franchisee, your franchisees as a franchisor, your owner operators have will determine how well they'll deliver your brand, or how fast they will grow, or how well they'll be able to hit the targets that you and they have agreed. I touched on this before. I'm going to come back on it one more time to say you also need to ask yourself this question, and some of you who are in the earlier days of franchising already know this one to be true too. And the question you have to ask yourself is it in your DNA to be an owner of a franchise business? Because it's different. Your governance is no longer because you're the boss or you're the owner or you walk in and everybody knows you and every one of your units is there's there's Charlie or there's Susan or there's Samuel or whoever, and straighten up because our boss, our owner is here. It's very different when you walk into an operation that's owned by somebody else and they may not even recognize the employees, shift managers, a general manager of that location might even not know who you are. And so are you ready to manage through oftentimes legal agreements, which is not as enjoyable as managing through personal influence? And understand also that there are some things that you can enforce and some things that you cannot enforce. And in your brand, understanding that, talking to peers, looking for other resources to try and build that list up front and say, what is it that I can reinforce and what can't I? Understanding that also finally, one of my final points, I got 2 more points here quickly in this area. We'll be shorter winded on some of the other questions, but understanding where your liabilities start and stop. That's really important, because if you're really searching to do risk reduction, understand that yes, you do reduce some risk, but there are regulatory moves, federal regulatory moves, and questions with the National Labor Relations Board around a thing called joint employer that have been kind of set aside under the last administration for the last 4 years. And I think they will come back to the fore and be discussion points again going forward. And what joint employer effectively means, and this is the non-lawyer speaking, so ask your attorney, or ask some labor attorneys, or ask people at the IFA about this. Do your research on this and understand where it's going. But the suggestion would be that you as a franchisor have some responsibility and potential liability in the behaviors and the actions of your franchisees, especially as it affects employment and employment conditions for their employees. Just understand that's a potential reality. It's had its fits and starts, but I suspect that there may be new momentum. I can't predict the future, but if there is, it would have an influence for me of wondering how excited I want to be about going down the franchise path, or at least understanding how would I work within that environment in a franchise path so that I'm not crossing the line and being seen as a joint employer. My final comment and consideration is a comment you probably half of you have heard of, a guy named Stephen Covey, maybe all of you have, and it's the idea of starting with the end in mind. And so if you're an owner operator, what's the end game for you? Is the idea of my business to make it a generational business? I want to be able to hand it off to my children, somebody in my family. I want them to be able to run it and someday hand it off to their offspring or some other member in some other shape and form. That can affect how you think about whether you want a franchising model or an owned company model. Only because the dynamics of franchising are regulated outside of your control, and they're going to constantly be changing. They're going to be the subject of probably policy volleyball from time to time. Okay, it's all part of the reward that you get with the risk. You want high margins, you also take some risk, but just understand there's a balance there and think through that. Think about what your end game is. If your end game is an end game of I want to build this business for 10 years to name your number, 50 units, 200 units, 1,000 units, and then I want to sell it to somebody. That may well be better for you to think more heavily about taking the risk or whatever risk associated with franchising and jumping into franchising, because franchising models generate higher cash flow multiples as a rule. You can figure that out by looking at the stock market yourself. Go pick 5 companies that are company-owned restaurant models today and look at their multiple of cash flows or their multiple of earnings versus franchise models, and you'll see the multiples are usually significantly different. Not always, there are some exceptions like Shake Shack, but generally they're significantly different. And so if you want a higher return, franchising produces very nice and high returns for you as a seller down the road. And so with that, I could have gone on. There's a long list of considerations, but Sydney, I'm going to stop there on that question, and we probably need to move on.
Yeah, that's great. And your passion for the subject, not to mention your multitude of experiences, with all of this definitely shines through. So no problem at all. I think you touched on some of this already, but one of my next questions was just about, general factors to consider for a business's readiness to move into franchising. And so I wanted to see if there's anything we didn't cover in that first response that you want to make sure you drive home.
I do. So let me not be redundant, but also pick up a few other points here. It's really important in terms of readiness. One is, and this will not be comprehensive. And this is an area where you really need to do your homework, because my very first point is, have you benchmarked? Have you made extensive plans? Have you talked to others? Do you understand all of your other costs that you'll be incurring that you didn't incur as company ops, but you would incur as franchise ops? Because there are offsetting costs. You have legal costs, you have your initial fees, set up your franchising, you have annual tracking and annual reporting costs in your FDDs, which are not trivial, getting them FDDs through the approval processes, tracking all of that. Will have you'll see a jump in your legal cost and some of your other administrative costs that you probably don't have today. Not that you don't have some legal costs to be anywhere in business today. We have some, but those will go up. So make sure you've done your benchmarks and you've modeled not just the four walls, but you've modeled your business with those costs. Do you have a comprehensive operations manual? This is really important. You probably thought I would say, do you have an ironclad franchise agreement? But I'm going to say that's a given that you've got a good franchise agreement. Most of them are, plenty of models out there. You can do that. What's really important is so much of your franchise agreement is going to point back to your operating manual. And your operating manual is important to you because it becomes the arbiter of a conversation. You think it's for telling people how to run the business, but I've seen too many operating manuals, both digital and paper, that were never cracked open after the franchise was opened. They only get cracked open when someone says on page 25, section 1.2, you are obligated to do X, Y, and Z. And we're now going to have a debate about that because you're not doing X, Y, and Z between you and your franchisee. And so you want your operating manual to be comprehensive in the sense that if you have to go there and you don't want to do that, picking the right franchisees, hopefully, and over the long term, hopefully, is more than sufficient, but sometimes it is not. And when it is not, and your brand's not being delivered to your standards, you need a point of reference. And that's what your operating manual does for you. Are your four-wall economics really nailed down? Earlier, I said you need to know the why, the what, and exactly where you win. Now I'm talking about the four walls. And so do you really understand your building costs? Do you really understand your cash startup requirements? Do you really understand the range of expected annual returns on an average box, on an average unit put in the marketplace? Not your best unit. That's the ones you'll want to showcase in your FDDs and your disclosures. But you need to be really candid about what's really the average and what's the low end look like. And in there, is there room for a franchisee to be financially successful, to get an attractive enough return on their investment? Have you looked at, and do you have a sense of the impacts of alternative channels? And what I mean by that is some cases you can go into captive market, like airports. It can be great, but you don't get the franchise fees typically that you would get outside on the street side. But also just the impact, which those of you who are all in this business know this even better than I do, because I have been on the sidelines for just about a year now, watching the COVID effect that you could give me a webinar on. But the cost of delivery, as you know, is huge. And how is it going to change and how is it going to affect your business? Because it's probably around to stay for a while. So doing that seamlessly, having great tech to do that is like really important. And so are you there? Are you investing in that along with your partners? Understand performance swings in the market. It's even though what you will want to put in your FDD and your first disclosures, if you're going down the franchising path, will be your best look at the world. Do your own pressure testing so you understand what downsides look like as well. Another point, how strong is your marketing? You'll want to require a percentage of your sales as an advertising fund. Frankly, today you'll want to consider having a percentage of your sales, maybe small, or at least have the right to also have a tech fund. Because I don't think tech expenses should be seen any differently than marketing expenses, in my view. Backing into that after the fact is really hard. We had 7 brands, and it was really hard to begin to assess a tech fee to our franchisees. But at some point, there's the ongoing tech that they're going to pay through their systems. That's not part of your tech fee, but development is always going to be front and center for your franchise, you as a franchisor, and you're going to want to be compensated for some piece of that. And so understand that you need to layer that in plus your franchise fee when you start thinking about the economics for each of your franchisees. In other words, if you layer in a marketing fee, a franchise fee, and a tech fee, and take that out of your margins today, and then look at your net cash flows after that, what's that return feel like on your four-wall economics? Because that is a really good acid test of, are we ready or not? Are there some things we need to work on? And finally, I'll stop in this point to say, again, it's the cultural question, but readiness really has to do with, are you ready to hand your brand off to someone else on Monday morning with an operating manual, a couple of weeks of training, and you have confidence they can do it. And I think in the early days, that's usually pretty easy to do, because what comes to you are enthusiasts, customers who love your brand, customers who've been in your operations, in your restaurants, customers that are going to come with that passion. And by the way, they're going to be generally very good and attractive franchisees to have. But down the road in the future, you'll start to sell franchises to people who don't have those same levels of passion, but you become anxious because you're ready to grow in a new area and enter a new market. And in those new markets, in the new areas, you won't necessarily always get that same passion. And so you have to say, if I don't count on passion, can I do it with the quality of my operations, my understanding, my ability to support those operations? Sydney, I'll pause on that one.
Yeah, that's great. And I wanted to note, there are a couple great questions already coming through the Q&A. So we will save a little bit of time here towards the end for that. We're keeping an eye on the clock. So thanks, Steve. One of the next things was just, I wanted to touch on the key considerations that folks should weigh when they're considering a single versus a multi-owner approach for franchising, and then just some pros and cons for both of those scenarios.
Yes, and I've got about 6 or 7 minutes on this question, and this is probably the biggest of all of them. So it's going to be worthy of further conversation. But well, I've already said, so your operating model is a key consideration. If you think about Annie Ann's operating model, multiple units, international, 1 per mall, roughly. And 80% of the malls penetrated in the United States with a pretzel concept. The majority of those Annie Ann's, they were the market leader. It was unthinkable to have an owner that owned 100 of those, for at least in the early days of the first generation or 2 generations of that brand. Because the logistics, it didn't make sense. The typical owner was someone, this was either a part-time or a full-time gig. They worked in the operations. They may, at the most in those days, own 2 Annie Ann's franchises because they were close enough to each other. They could drive between them and keep an eye on them and maintain the staffing. Contrast that to McAllister's. That was built on a unique development model that assumed that right from the very beginning that a franchisee would be a multiple unit owner. And we'll get into the pluses and minuses in a second of support in those areas. So I'm going to jump to that next, because that's really the differentiator. In single unit operators, a franchisee who has bought that franchise for themselves, maybe a spouse, maybe one of their children, or someone else that they're trying to put into business, they put them into business, and their expectation of support of you as a franchisor may be higher in terms of just teaching them business acumen, customer service skills, and reinforcing them, their ability to hire and replace. Turnover, as you know, all of you know as operators, is one of the toughest things to do right now, is to find quality people, affordable people, balanced full-time and part-time. And so think about, that's one of the biggest, most challenging things you're going to hand off today, probably going to stay that way for a while. The multi-unit operator, no, by the way, on the single unit operator, also think about the fact that the single unit operator, your span of control, your support system will be different. So one person that has to travel to 20 or 30 cities to see 30 units operating in the mall in each of those cities. Think about that. That's a very different proposition than a multi-unit operator who owns over time the first 5 and then 10 and then 20 or 30 units, like we had in McAllister's, where there were 30, 50, 80 units and growing. Your core support there was to that franchisee's organizational leadership team and infrastructure, not calling on all 100 of their McAllisters. There's no real reason to do that. You may spot check them, but you're really working with a much more sophisticated operator who's teaching customer service, managing sophisticated HR systems, supporting, hiring, etc. And so the question is, which of those does your business model best support? It really is business model driven. Next consideration, just your capital requirements to achieve growth. Single and double digit unit operators. In other words, single and double unit operators, 1 and 2 unit operators, so small systems. They tend to rely on their own capital, personal guarantees at the bank. Maybe it was their savings. Oh, in the past, I saw places where they cashed in their insurance policies to buy their franchise. Not a practice I'm a fan of. And by the way, I never sold any myself that way. At that point, I'd look at somebody and say, you probably ought to do something else. But sometimes people will have enough capital to buy themselves a job. So if the model has good cash flows, and Annie Ann's, for instance, was great cash flows. It was one of the highest cash flowing margin businesses in the industry, loved by people like HMS, who did airports and hotels. It could support that. But some of your operations can't support that capital. And so where you need 750,000, $1.25 million, those kinds of numbers per unit to build a new unit, you really know the answer is, I need large multi-unit operators who have sophisticated financial structures, know how to go to the bank, have lines of credit, and manage that balance sheet really well, because that's going to give them the ability to grow your brand. And so if your brand needs that kind of capital, and I think about capital above $500,000 to $750,000, certainly multi-unit is multi-unit operators would be the way to go. And finally, just last comment, this is one of those future ones looking forward. It's the be careful what you ask for. There's a lot of difference between managing, it has its challenges, managing 100 single unit operators, or managing 5 20 unit operators. And the difference in the early days isn't too bad, but as brands mature, as the market conditions change, as your need to manage your brand with those changes and meet those demands change, reinvested capital comes to the question. And who's able to reinvest that capital? Single unit operators, if they've got great cash flows, can do that. Big multi-unit operators may or may not be able to do that. They may also begin to think that they have an option as to whether to do that or not. And so they begin to become bigger influences on you and on your ability to be nimble. And so a lot of what we've seen, certainly in the last decade, I know myself in the last 6 or 7 years, the ability to be nimble is absolutely essential to change. Think about what didn't exist, Postmates, Uber Eats, et cetera, go back 7 years, and those were barely a conversation in my organization. And we were international, and big company, and we're saying, oh, I don't know. We literally were one of the very first to sign up for Postmates, and it was an argument at my executive table about why are we wasting our time? Can you imagine that today? The idea of not looking at third-party delivery. So nimbleness and being able to deploy the technology and the ability to shift your business model. It's kind of hard to do with big multi-unit operators who tend to want to do it their way or in a different way. So just bear in mind that as a consideration. Cindy, I'm gonna kind of halt there. I think all we were really down to is a couple of summary things. So I'll hand it back to you.
Yeah, for sure. Thank you so much. So we can go ahead and move on to the next slide. I think we'll pause on the prepared questions that I had for you because we've got some great ones that have already come through on the chat. And so if Antonio's still on the line, we'll follow up with you after the fact because you've got some questions about your specific organization. But I want to go ahead and ask Greg's question about the process of creating a franchise model. Can this be done on your own, or do you need professional assistance?
I would have professional assistance. At a minimum, I would find a good franchise attorney, or in a firm that isn't. I didn't say a good attorney. I said a good franchising attorney. It's really important. Probably 90% of the pitfalls will be right up front, and understanding, is your operating manual sufficient? A good attorney will be able to tell you that. Does it connect correctly to your franchise agreements, et cetera? So if I think about I think about the logistics side, I would want a professional. If I think about the operating side, I don't know that you need it. I don't find the operations really different. I think the big question is, are you preparing and able to influence unit managers, general managers, or other organizations through your team? So over time, you'll change the complexity of your above store support staff and their capabilities, but a lot of that can be homegrown. It doesn't mean changing it out. So I think a lot of that you can do yourself.
And one of the next questions that I have is, what is the most important thing when writing an operation manual? We've got somebody who's working on it right now. And then they're also concerned that someone might copy their operation manual. So.
Well, first of all, let's start with this. I learned this a long time ago. I worked at a research center that had 700 PhDs, and then a dumb guy like me. I don't know what I was doing there. I was doing some business startup stuff. And the first rule was that the first secret is there are no secrets. So your operating manual will be seen by others. Just get over it. So that kind of follows on to my next comment, which is, candidly, I may be looking for examples of other really good brands that have really good operating manuals, and I'd be upfront with their heads of operations. I'd be glad. There are people who are, go to the West Coast if you're on the East Coast. Go to the Midwest if you're on one of the coasts. Find somebody who's not, directly in your market and terribly threatened. But there are ways of sharing that are of value. The IFA can help you with that. But I would say, because I can't give you any better guidance than that. But great operating manuals are easily understood. They're written they're written correctly so that you have the right guidelines and fallback positions. But they're also instructive. Don't forget the part that we got to have the average person to be able to read a page or parts, extract from it. How you deploy it is really important too. It certainly needs to be deployed digitally. Forget about printing things these days, of course. But how you assert, how you embed it, the training tools that you keep live in real time, that take the important snippets of your operating manual and keep it front and center with your operators who actually want to be successful people. General managers want to move up in their careers. They want to do it well. They want to do it right. Don't forget them. And that's the tough balance here. It's the balance between, I've written it so legally I've got a good baseline to discipline my brand, but the flip side of that is I've been helpful to my operators.
Excellent. From Nikki, we have a question about how you handle the technology split with franchisees.
So we had 7 brands, and this was, by the way, not even a question back in the Burger King days when I ran the international component of the business living in London. It wasn't even on our radar. Everything was in a mainframe someplace. So fast forward to today, and we don't make these big capital investments anymore. Everything is subscription based, and it became subscription based. So one is that I would handle the tech piece with just making everybody understand that when we make these ongoing monthly investments in whatever we're paying for use of technology, it really is taking off of all of our plates, including their plates, big infrastructure costs that they'd have to pile in anyway, and it gives them the nimbleness to continue to grow and change. Just in terms of development, if you are the 75% on this call that haven't started yet, even if you don't initially put a fee in for technology, you should make sure you reserve the right, and that all your franchisees who are coming to your brand know that one day there will be. You may even start with a very nominal amount and say that you have up to an X amount of being able to increase annually, because it's going to be very important that you as the franchisor can invest your own people's time up front and in advance. And a lot of your tech, by the way, will be marketing tech. And if you choose, and you can, and this is what we did because we didn't have the ability to do tech fees in some of our brands, was we literally started to increase because we had the right to increase our marketing fund requirements. And then clearly, with transparency to our franchisees, show them how much of that was going to developmental tech support as we think about moving ourselves truly to machine learning, artificial intelligence, multiple offers within the same periods, that you can manage multiple offers, the offers based on customer demographics and psychographics, so that you can manage them easily and so that they can be offered easily. So those are things that you're going to want to be able to do, and you're going to find that times your marketing funds won't be sufficient. So it may be embedded in your marketing fund as a component.
Excellent. For the sake of time, we'll go ahead and move forward to the next slide. But I do want to address folks who have questions in the thread that we did not get to. And so for those, we will actually follow up, in addition to the recording of this webinar, with some Q&A responses from Steve for anyone that we weren't able to address. And just appreciate your time and attention today. I wanted to also do a final shout out for the Revel Advisory Board. Anyone who is a Revel client who is interested in taking a deeper dive with Steve on their own franchising questions, we would love to go ahead and coordinate a consultation with you. And so you can request a consultation through advisoryboard@revelsystems.com. And then from there, we will handle the coordination of that meeting. And just want to say a final thanks for Steve, your expertise, your time, and then everyone else who carved out some time to join us on the call today. It's much appreciated, and I think we had a great session.
Thanks, Sydney, and thanks to all of you. Good luck in your decisions and certainly in your business. Thank you.
Thanks so much.